The idea that you can have an alternative network for payments is it's like trying to explain perhaps the difference between the radio, wireless and mobile phone networks to someone the generation above us. And it's not very hard to understand that difference. And I think that's kind of what's happening a little bit, is that it's just hard to understand what we mean when we say blockchain, or crypto. What does that mean? And I get that. That's that. So there's still a gap, but I do believe that there is some great leadership coming from both sides.
Welcome to another episode of the Unicorns podcast. I'm your host, Justin Kelly. Today on the program, we're talking about the future of money and what that means for Australia. From stable coins and payments reform to the ongoing debate around debanking and crypto regulation. Digital assets are increasingly intersecting with mainstream finance. Joining us today is Jonathon Miller, Managing Director for Australia and Rest of World at Kraken, one of the world's largest crypto platforms. Jonathon has been at the forefront of Australia's crypto industry since 2013, when he launched BitTrade, later acquired by Kraken. We'll explore where Australia sits in the global crypto race, what's holding innovation back, and whether stablecoins could reshape payments as we know them. So let's get into it. Jono, welcome back to the Unicorns.
Pleasure to be here. Thanks for having me.
You've been around the crypto scene, if I can call it that, for over a decade, 2013, I think. Long before it was mainstream. What was it back then that first convinced you that this was more than just a passing fad?
Great question. I have to cast my mind back. I think, my background was in software, but also I'd studied macroeconomics.
Mm-hmm.
I was very interested in kind of supranational currencies, and so I got introduced to crypto back then when there was really only the one thing, which was Bitcoin. And what I was fascinated by after I kind of dug in a little bit and was frankly a bit of a black hat to begin with, it's curious, skeptical, but I was fascinated by the technology and the idea that you can have a decentralized network that's maintained without one kind of key, central clearing counterparty. And that to me was really fascinating, because this idea that you could potentially issue money that didn't require some form of actor, that was a state, was fascinating. Just a fascinating idea. So those two worlds kind of brought me together. It really was a technology.
And so looking back, reflecting on over a decade around the crypto markets and specifically casting your eyes over the Australian landscape, how has that evolved over the past decade from an Australian point of view? Yeah,
I think it's come full circle to a certain extent. Two things have happened, I guess. One was when people kind of started understanding Bitcoin early. They were similar to me, perhaps technical people. And what people recognized was that there was a potential to use the technology for more than just one particular coin. And we've seen a proliferation. But probably the most interesting thing for me was the development of a kind of all-purpose blockchain like Ethereum. And what we've seen is that has now and remains really this idea that is probably the most permanent, that you can use this decentralized, distributed database effectively to build all sorts of value transfer and other kind of financial services products. So tokenization is, really where we've evolved to now as a mainstream idea, that you use this tech as alternative financial services rails. But also, when you go back to what Bitcoin was in terms of full circle, so that's come to fruition, but what on the tech side, but on the Bitcoin side, and this idea that you can have money that's on this platform, you're seeing stable coins being kind of the most recognizable crypto product that exists now, with massive US dollar stable coins in circulation. I think the number was $33 trillion worth of value transferred in US dollar stablecoins last year. That's a big number. So money on decentralized networks is the kind of theme today. And I think that's also true for Australia, even though we're talking about US dollar stablecoins. That's also true for Australia because Australians are importers, they're exporters, they trade on these markets. There's a very advanced appetite for trading in this country, and so there's a lot of adoption of these kind of technologies today, and we're seeing the tokenization thing play out here as well.
When you talk about adoption, what are some of the figures with respect to Australians, and their both understanding of digital currencies, digital assets, and who hold digital assets of some kind?
There are competing studies, and we're just running some additional numbers at the moment. So I'll have to refer to some slightly older data, but I think it's still valid, which is that anywhere between 1 in 4 and close to 1 in 3 Aussies have had some form of exposure. By that I mean they've bought or they've held or they've been given or they've touched crypto in some way, shape or form. And so that's a pretty big number. That's why we've seen governments move, not just because we had some failures in the market with big collapses, but actually because so many Aussies are holding this thing, and there's a fair few companies that provide these services. We've seen governments move to create law around this, and then the type of people. It's interesting. There's an interesting kind of inverted bell curve where you've got young people who are digitally native,
yes,
getting really into this and understanding it kind of just by default. And then you've got the other side of the story, which is people who have disposable income and they're looking at the investment case. And so there's a skew towards people who have disposable income with investments. Another layer is the institutional adoption, which maybe we can talk about as well. But there's been moves both, internationally, but also in Australia to buy institutions into this space. And for a long time, just on the private balance sheet, but now moving more and more towards providing those services through to their clients.
And you work at Kraken. What is the general understanding of that brand in Australia?
Yeah, Kraken is a crypto exchange. People who are OG crypto people know it because it's been around longer than I've even been in the space, if that's even possible. So it was founded very early in the US.
Yes.
And so Aussies who were early traders really do know Kraken. And then, there's possibly a little bit of a gap amongst some of the newer entrants in the kind of 2017 time frame where they were using other platforms. And then more recently, we've invested more heavily in Australia to become a bit more of a household name here, and we're continue to do that. So we're seeing that reflected in the numbers, and also I think interestingly, other platforms in the market, other crypto platforms are very familiar with us because Kraken is a very respected, deep source of liquidity, global liquidity, and we bring that global liquidity into this market by virtue of the fact that we have a local operation here and access to those global order books.
So when you talk amongst your friendship group and they ask you, Jono, where are you working these days? Are you still working at Kraken? Do they have any idea what a crypto exchange is, what Kraken is? Are you breaking through that layer of understanding? Do they get it?
Yeah, absolutely. Yeah. And I think that people also understand that it's a global brand, first and foremost. And, with being, very big in Europe, one of the larger platforms in the US being a US headquartered business, extremely well known in the UK, probably dominant market leader in Canada as well. So, people are aware of Kraken and they have been, in a way, waiting for us to be more present in this market, and I think we're achieving that now.
I want to shift gears to debanking. It's become a major issue in the crypto sector. How serious do you think the problem is in Australia today?
Well, I've had a lot of experience with it, especially starting a business in Australia in this space when crypto was just kind of like, firstly, what is that? And secondly, is it bad? They're the two.
Yes.
They're the two questions. And so, but I think, fast forward to today, Kraken is in a fantastic Kraken is in a fantastic position because of the hard work it's done to make it very clear to its providers, banking providers, that we're a really good operator, that we have better compliance than most of the banks, frankly. And so we don't experience it directly.
Yes.
anymore because of those relationships, both global and local. However, that's not to say that it can't happen because the space is still pretty emergent when it comes to the relationship with the banks. Our clients, however, do experience this as an issue. It's a real problem because you've got businesses. People, start with individuals who want to trade crypto. Well, they get blocked because banks think that the individuals can't look after their own money. And I think that there's some concern around scams. I think those concerns have been addressed, but the risk vector in the eyes of the banks is that they still see it as being too risky. That being said, I think there's a worse version of that, which is when clients actively get debanked by their institutions, be they individuals or businesses, even worse for businesses. Because if you think about one of the really interesting opportunities for crypto in the Australian market today is to bring down the cost of payments, for example. And I believe that to be, very possible. However, if you're a business and you're worried about losing your bank account, why would you accept, newfangled payments technology that might lose you your bread and butter bank account for your coffee shop?
So what is the rolling impact of restricted banking access for the end market consumers?
The main one, I think, is opportunity cost for them getting exposure or being able to, firstly, do what they want with their capital, and secondly, get access to some of these technologies, including some of the investment kind of asset side, but also if they want to experiment with DeFi, for example, and learn about these things, you need to kind of have crypto to even play there. So being locked out of what we believe to be the future of finance is, I think, net negative. And then, then there's just the kind of broader potential loss for the Australian economy when it comes to not allowing businesses or inadvertently perhaps stifling innovation.
So what's the motivation behind all of this, do you think?
Well, I think there's two layers. One is that there's definitely been risks, and we're an actor that works very hard to ensure that those risks are mitigated and that we educate our users, for example. Generally speaking, I think financial literacy in Australia isn't amazing. And so people unfortunately find it difficult sometimes to determine between a good and a bad actor. And I think that's true not just for our industry. That's true for even fashion. Like people who lose money to scam fashion sites. I mean, scams are everywhere. So that's just the reality that we exist in the kind of modern digital economy. And I think education is a big part of it. The other side of it is that, when you can become participant to the decentralized economy and take advantage of some of the opportunities there, which include earning or rewards based kind of products where you will get a yield effectively, that's directly competitive with existing products that are regulated. And I think that the gap there, the regulation gap, is a problem because it means that the vested interests have a very good argument to say, well, we shouldn't be letting people go and play over there. And so that they're the two forces I think at play. And I think the work that's being done, by regulators in Australia will probably close that gap. And then we'll start seeing, perhaps competition on a slightly more even playing field.
You touched on stable coins before. There's been wholesale stable coin trials by the banks in Australia. Do you think we're innovating in the right areas?
Yeah, I think that's a great start to look at how you can improve wholesale clearing, settling, issuance, all these kind of things. But, that's bank bottom line stuff, which, if you've got a super account, you've probably got some upside in these banks having more revenue. But it's very indirect for the end user, whereas we believe that these technologies can directly improve the costs for individuals and consumers in the economy. So I think that there should be more retail experimentation from the top down. The signalling that you get from the RBA experimenting with wholesale is basically saying, well, this is not for the end client. Now, maybe, just maybe, that will happen next, but I think it should be happening in parallel at very least, because these stablecoins exist today. They're in the retail market, and thankfully they're no longer in as grey area as they used to be. but they're still not perfect, and we need to have two things. One, I think, is top-down signaling on how you do this, like how you actually, roll this out. And secondly, you want to have regulation that's specific to that particular instrument. The stablecoin as an idea is relatively new. You're seeing specific legislation in Europe, specific legislation, in the US with the Genius Act. These are federal level rules and laws for stablecoin issuers, and we don't have something like that here. And it's not necessarily specifically contemplated in the current draft bill that's going through Parliament at the moment.
And is that a gap?
There's a gap, yeah. There's reform coming on payments. I was just yesterday at the House Economics Committee inquiry into payments in Australia. So there's reform coming, and that's all great. But I just think, with big players like the US and Europe really coming online with this, it's gone from a jog to a sprint, and we're kind of, still jogging.
So following up on that, how would you describe Australia's regulatory approach to crypto compared to other parts of the world?
A mixed answer here. So I think that for a long time, poor, but equally poor, because the rest of the world was doing, not great either, especially in the US. The US was very hostile.
Yes.
And Australia was kind of in that bucket of saying one thing and doing the other. And then that's now flipped, which is good. And there's movement. So we've got a bill that's going through now to the Senate, passed the House. That's fantastic. It's still really only one piece of the puzzle, as I just mentioned. There needs to be more. So, we can't stop there. But then, compared it to the rest of the world, who are now radically ahead. So, bills passed in US, legislation passed in Europe, the FCA in the UK, all these major markets that we look to as far as our financial services regulators, they really do look to those markets for guidance as well as others, but those ones are the key ones. And we're now, probably just in the coattails of those, but not. We should be just running next to them and going as hard as they are.
And do you see, Jono, this becoming more of a prominent political issue in Australia over the next 12 months?
Yes and no. So I think my experience yesterday, speaking at the inquiry, was that there's still a gap in terms of this understanding of the technology. And I think it's hard because, some of this is, to a certain extent, just a generational thing. The idea that you can have an alternative network for payments is... It's like trying to explain perhaps the difference between, the radio, wireless and mobile phone networks to someone the generation above us. And it's not very hard to understand that difference. And I think that's kind of what's happening a little bit, is that it's just hard to understand what we mean when we say blockchain, or crypto. What does that mean? And I get that. That's that. So there's still a gap, but I do believe that there is some great leadership coming from both sides.
Okay.
In Australia by that slightly younger generation, people like Andrew Charlton and people like Simon Kennedy, who are digital native people, pretty much, similar age to myself or thereabouts, and they are championing crypto because of the innovation potential of the technology, and I think that's the right approach.
And so what risks do we face as a nation if we move too slowly on enabling better regulation?
Yeah, there's an argument that there's like sovereign kind of competition happening here to attract, or to make sure that this innovation happens within their domain, and that's true for all technologies. You're seeing that at a really heightened level when it comes to AI, for example. Crypto, not quite as aggressively, but still true. I think it's still true that companies will move to jurisdictions where they feel they can do business, and where that business happens, the upside is greater. So you're seeing businesses leave Australia because of the uncertainty. Innovative businesses that are building,
Are they private companies or public companies?
Private. Yeah, private companies, startups having to move and re-domicile because they are just not getting... Firstly, it's hard to get investment here to begin with, being a smaller market.
Yes.
But also, when you layer on top of that regulatory uncertainty, which is now coming, we're coming to a little bit of clarity, but the last 4 years has been the opposite. In fact, I think not just uncertainty, but also hostility, it makes no sense for an investor to invest in a company in this market. So that's, if you then add that up across an economy, then that over the course of 10 years, what is the opportunity cost? That's what I think good legislators need to think about. And I think the individuals I mentioned before are thinking about, the horizon longer than just, the electoral cycle. And I think that's critical when it comes to any form of innovation, really.
Well, I'm pleased to hear that you mentioned that Canberra appears to be listening, that they at least recognise the issue and they're trying to work their way through it.
Yeah, I think that's evident. And it's just about, not getting complacent, because there's this stuff moves so quickly and everyone else is moving fast as well.
Now, I've got here in my notes, Jono, that you've recently created Krak, K-R-A-K, which is a global money app. Tell me what it is, how it works, and the vision for this app.
Yeah, Krak is what everyone needs. Krak is
That's a soundbite.
Krak is a global money app. Yeah, it's our deployment of the technology, so to the end user in a very different way to the way that we, have our trading apps. Because this is not an app about trading. This is about money, digital money. So digital wallet, digital money. You can transfer value, be that in dollars or crypto or stable coins, to other members of that app at zero cost, and you can use it to send crypto payments, receive crypto payments. It's a blockchain native digital wallet. On top of that, there are some other features. Those, unfortunately, aren't yet available in Australia.
Okay.
For example, attaching a card. I think that the card is a kind of legacy thing these days because of that merchant adoption issue that I mentioned before, where you need to connect with people and allow people to spend at merchants in a way that they understand. But I think that the goal here is for people to be able to use the inherent, like the native crypto capability of this app over time. So this will allow you to store, send, to spend. And then there's some other kind of interesting features that we're looking at building into this platform that allow people to get rewards and build their crypto balances and wealth over time. So there's a really interesting kind of array of services there that, if you step back and you kind of squint your eyes, maybe it looks a little bit like a kind of neobanking kind of experience, but it's not. It's a money app. It's designed for people who are, digitally kind of native, who are globally kind of nomadic to a certain extent, but also who want to have a really, blockchain from the ground up built experience in their wallet.
So if you're like me and have endless numbers of apps on my phone, to the point where it's like, what even is that app? I don't even know what that does. So what is the sell for downloading Krak? Why do I need Krak?
Yeah,
Can't believe I'm asking this question. Why do I need Krak on my phone?
So you can send money to other people for no cost. That's the number one sell at the moment.
Let's talk about market trends and the outlook. We've seen queues for people, certainly in Sydney, trading physical gold in the past couple of months. Can you offer an opinion on why you think that is?
I should have walked down there and asked people to download our app. You can buy tokenized gold, on digital platforms these days. There's an interesting phenomena that there's an appetite for getting real gold, but that they don't actually walk out of the store with. So it's I think a bit of a legacy way of thinking about flights to safety. Mm-hmm. I think a lot of what was driving people was just the shape of the chart that they saw with gold, and that's true for lots of assets, not gold, not Bitcoin, all sorts of things. When it's going up and up and looks like it's going up forever, people line up. So not great time, I think, because for those folks, the prices for gold have kind of shifted around a bit as well.
They have bounced around.
Yeah. So I think, what was driving that, though, then stepping back again, is just the theme of global kind of uncertainty that you see that's pretty prevalent in the news. Don't need to kind of go to, talk too much about that. It's pretty obvious what's happening with the amount of macroeconomic uncertainty, pretty radically uncertain times when it comes to the decision making from the President of the United States, which has an impact on markets. And yeah, I think those things all play into it. What's interesting, however, is that people didn't look to Bitcoin at that time, which is traditionally actually what we've seen.
Yes. Tell me more.
Yeah, I obviously personal opinion here. The view in is that there's a lot more institutional adoption, but the way that institutions have been looking at crypto assets is as a technology, including Bitcoin. So if it's
not as a currency.
Yeah, if it's exactly, and if it's a technology, and then you have risky times, and there was a big sell-off in tech stocks across the board because of AI and stuff like that. I think when you have actors who have large stakes in Bitcoin that are treating it like that, and then they sell for those reasons, it becomes a risk-off asset as opposed to a non-correlated risk-on asset like gold.
How do you ride the wave of instability when it comes to the price of Bitcoin? Because it has been very volatile, certainly in the last 6 months. And every time it drops, there are a lot of doomsayers out there predicting the end. Here it is, we predicted this. The whole thing's a scam. It's built on nothing. You watch it all go to zero, although it never does. Like, you're in the middle of that. You're literally in the eye of the storm. How do you try to balance all of that and stay focused?
Yeah, it's been volatile for the whole time it's existed. And if you look at, especially when it was really early, when I think it did have that risk of going to zero, it was even more volatile. I think ultimately there's too much time has passed now to say that the underlying network, that Bitcoin network, is unstable. So the speculative kind of opinion on the price of Bitcoin on top of that is always going to be there, I think, and it may smooth out over time. But to my mind, the underlying network is still very, very interesting and remains useful. So that's why I was interested, going back to the start of this conversation to begin with, and it's why I remain interested. And a lot of people just think, oh, well, Bitcoin set and forget, buy it over time and just have some. And that's one way to think about it. The other way you can think about it is, okay, well, can I put that to work? There have been ways you can do that, and people are trying to develop more, I think, layers on top that provide forms of rewards or yield, and I think that will change the nature of the asset class, because at the moment people look at it and say, well, if it's capital appreciation only, then who cares? I can speculate on anything. But if people think, okay, well, I've got a long-term view that this is interesting technology and it can provide some sort of yield along the way, then that's even more reasons to hold something. So I think that's an evolution, and time will be the test of it. But that those are the kind of things that, when I think about the Bitcoin itself, I think about those things.
Just picking up on a point there about the volatility, it remains a common criticism of crypto. But taking your point there, do you think as the market matures, do you expect that volatility to ease?
I mean, I think that there's still like a big test for a lot of the platforms or protocols that have been developed. Are they useful? And it's still hyper speculative. What I am seeing, and maybe we can talk more about this, is the deployment of traditional finance products on top of these networks.
Yes.
And so
such as?
Well, tokenization, I think, is a theme. We've got a product that's called Xstocks, where we take a third-party company called Backed, which we then acquired, takes stocks from the traditional equities market, and they effectively kind of bank them, and then they issue a tokenized version of that stock, kind of like a stable coin, the same way you do that, where you take the underlying dollar and you bank it, and you might buy T-bills with it, and then you issue a digital version of that same token one-to-one. Same thing goes with Xstocks. Now, Xstocks is an experiment, again, in what it means to bring TradFi assets onto decentralized networks. And what do you do once they're on there?
Yes.
Are there more opportunities? Is it faster? I mean, our arguments at the moment are that it's easy to access stocks via X stocks for many countries in the world than it is to get direct access to equities. And so, you know, the thing about Australia always is that we have pretty good access, high-tech adoption. We have pretty good access to equities here, pretty cheap access. So it's not necessarily something that solves for here, but in many other countries globally, and Kraken operates globally, that is not the case. It is not the case that you can just download an app and buy equities in half an hour for a $5 or lower brokerage fee. That's just not possible. Yeah. So this is a way to make that possible. So tokenization uses blockchain networks, and then you put it, you know, these assets on them. And I think that's a theme. That will be a theme going forward. That's the kind of thing that means that the underlying tech, the kind of speculative side of the marketplace for crypto assets starts becoming perhaps less volatile when you just start seeing it being adopted and used for use cases that are really quite relevant.
I think it's fascinating that if you split up the consumers, the average punters who might want to have a crack at Kraken, buying, selling crypto through an exchange, that's one thing. But the move of institutions that would earlier have turned their nose up at this are now saying, actually, this is something we need to be having a look at. We need to be in this space for these reasons.
Yeah, so they're doing that on a couple of different dimensions. One of them is getting exposure to Bitcoin. That became a kind of argument across funds management, and then people doing that for, you know, managed funds, and then major ETFs being launched globally. So you've kind of seen that ramp up in terms of exposure. And then the other wave is issuance. So you're starting to see, major financial institutions in the US issue tokenized versions of their fund or their bond or whatever the case may be. And so, again, the theme of tokenization. So that's you know, getting involved at an adoption level. And I think what we'll then see after that, and this will be interesting, will be innovation. So, I forgot stablecoins as well. So banks are starting to look at issuing their own stablecoins. They're seeing these stablecoin operators come out and effectively compete with them. So that's really fascinating. So, and then I think the innovation piece, and this is the part that's, you can't really point to and say will happen because it's over the event horizon. But I think the combination of all those things where you can have instant settlement, programmability, decentralized marketplaces for all these assets that already exist in a much more efficient way, imagine what can be built there. Some people might say, well, that's going to be even more risky than today. Other people will say that's going to be cheaper, better, and more benefit for the end consumer tomorrow. So, yeah, that's exciting.
A final question for you, and picking up on that, what is it that excites you most about the next phase of digital assets in Australia?
Yeah, I think it's that invisible, or the stuff that you can't see yet. And I think that the reg framework stuff that we're working really hard on, we're in the trenches on, is setting us up for that future. And so, you know, you kind of go back to what we're at the macro story for Australia. We have done innovation relatively well, but the last thing we want is a brain drain. And so if you're thinking about, okay, well, what is exciting about crypto in Australia? It's the opportunity to build whole new businesses here and leverage the talent that's in the country to innovate. And that to me has always been exciting.
Jonathon Miller from Kraken, always great to have you on the show. Thank you for coming into our studio today, and all the very best in 2026. Thank you.
Thanks for having me.